Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to yet another episode of Insider Exchange. Welcome to Market Matters, live streamed for your viewing and listening pleasure every Monday morning, with the rest of the show set to follow later in the week, of course. This week, we are taking a look at US earnings data. We're taking a look at potentially some of the outperforming stocks in the form of local resource counters, as well as what we can expect for the rest of the week from a markets perspective. In our deep dive, we are going to take a look at how to potentially bolster the South African economy through various creative and alternative methods. We have explored some of these in the past, but we're going to do a bit of an in-depth dive into perhaps some of the things that would work for the South African economy that are within the control of the South African government and other stakeholders. And then in our Investor Insights, we're going to continue taking a look at some really bizarre developments. Last week, we took a look at the Evergreen contract, the Evergreen contract that came out from the team at Killarney Country Club. This week, we're going to take a look at ghost contracts within government municipalities. A government department agreeing to pay, I think it was around R1 billion to a company for a lease agreement that doesn't make sense. That's what we're going to get into the show. And of course, there's an unfiltered opinion at the end of the show, so stick around for that. Before we get into the show, the Irish names continue. This week, we are getting close to wrapping up the Irish segment of our name challenge, but we have got new names nevertheless. Si, would you like to go first?
Niamh.
Niamh. Neve.
I'm never going to win this thing.
Okay, I've got Fiadh.
Five.
Close, very close. Fia. We keep trying. The names are out there. I mean, it is quite an interesting thing. Guys, if you have those names that you'd like us to try out after we're done with our Irish series, let us know. It seems the Irish ones are the hardest ones that we've found. If you have found harder ones out there, let's give them a shot. Let's see where we end up with them. Morning to our communities. Morning to those joining us on live stream. Morning. Shout out to our TikTok community. Always happy to have you guys on board. Thlogi says good morning in our live chat. Hopefully he's in his lectures as always. We don't want to encourage bad behavior. We're here for good behavior. So let's get straight into market. Actually, before we get into market matters, so part of our deep dive is going to be something that was sparked by the conversations that we put out last week. We spoke about the Evergreen contract with Killarney, but we also spoke about funding Formula One. And over the last couple of weeks, this has stirred up quite a bit of drama online. And I want to get through some of the comments of what we got from
You read the
posts.
comments.
Yes, the posts that we put up. I'll read the comments because they're quite interesting. I mean, the lease conversation, for example, the Evergreen contract with Killarney, that garnered quite a bit of reaction, both good and bad. And I suppose it's part of why our deep dive makes so much sense for today's episode. But some of the comments that stood out there, I mean, someone brought up other things and said, well, you see, because of this, or because of these contracts, it's the reason we're not going forward. We're not having things work out the way they're supposed to. There was a whole hubbub about it. And I just thought I'd pick out some of the interesting comments. I've just jumped into our chat here and they say, Willie says, Para Golf Course lease is about 904 Rand per year on 55 hectares, if he remembers correctly.
Now, so I'm going to prepare to offer 1,500 for that. I mean, I'm not interested in the golf course part, but we could make a little camping setup. I don't know. I mean, like I could sublend. Yeah, okay.
Someone whose handle is Jacob Zuma. I highly doubt it is the leader of the MK party. Says, my dad told me that the government complex in Mbombela is on a 100-year lease, a government property. The public is not privy to this information. Now,
There's 100-year leases. I mean, they've got historic precedent. They make some sense. It's not the duration necessarily. It's what are they paying? That's
there we
what
go,
we stress.
right?
It's like, how much are you paying for your 100 years?
Aslam says, what's different than paying 59,000 Rand for a pen post-apartheid?
No. Well, this is not one side's better than the other. This is like oaks are ripping.
So this is why we're going to get into some creative ways to unlock South Africa's economy. We're going to look at things like evergreen contracts in our deep dive and perhaps see if there might be some merit, because there was some merit in some of the comments that were put out. I mean, some of the comments were saying that because these sorts of businesses like Killarney employ people and all of that and contribute towards the economy, we shouldn't be so hard on them around whether or not they're paying for those leases or what amounts they're paying for the leases, because they're creating jobs. That's neither here nor there. That's something we can revisit at another time as to whether or not we agree that it's fair for a company to pay 2 Rand for a lease agreement on the simple basis of the fact that they're creating jobs. But that's for the deep dive. Stick around for that. Market matters this week. Earnings in the US continue to come out.
Yeah.
And that's
almost Spanish.
Yeah, we're almost about done. We've gotten the big ones out of the way by and large.
Except NVIDIA.
And that's really what wraps up earnings season and gives a lot of guidance to the market. But I did see that from a US-China perspective, they are even more relaxed around those chip prices, saying that the chip deals and the import tariffs and all those sorts of things. It looks as though the US is still very much or very open to having those concessional agreements with China related to the chips as it benefits them.
Yeah, and then this morning, NVIDIA and is it AMD can sell chips to China as long as they kick back 15%. Okay.
Well, I mean, it's
Okay.
it's the contracts, right?
We live in times, is I think what you're saying.
That's it,
Yeah.
right?
Yeah.
So living in those times, I'm actually trying to find it now. It is on, I saved it from one of my socials. And it is a breakdown, well, not really a comprehensive breakdown, but more of an indication of just how much Trump's net worth has moved over the last, or since stepping into the White House for the second time. It's very interesting that the numbers... I'm trying to find the exact post. I think I found it. I have found it. So the first 100 days is what is being looked at here. And it is I'm trying to see who's the pod. A Northwest University professor and serial entrepreneur named Prof. Galloway, Scott Galloway, put this out on his social pages, saying that the first 100 days of the Trump...
I know Scott Galloway. Well, I mean, don't know him, but, know of him.
So he's put out that just some data points from there. Trump-affiliated entities have made $300 million in trading fees in this time. The Trump family net worth has increased by about $3 billion in that time. And we're not accounting for some of the movements from the Trump coin as well and all those other things. But Trump's family net worth has actually gone up significantly in the first 100 days of returning to office. And for some reason, we're still not calling this insider trading.
No, because it's not... I mean, insider trading is like when you're doing it in like dark rooms on Signal apps, and okay, that's a bad example. But insider trading is usually like undercover, done in a golf course with secret notes and pigeons. This is just like the Oak standing there in the fucking White House lawn.
So what's market manipulation out in the open?
Yeah,
what do we call that?
Then it's just Nancy Pelosi.
Oh, okay. Yeah. Well, to be fair, makes sense. But it has been driving a lot of the movements from a market's perspective. If you look at markets reaching all-time highs, we look at something like the Nasdaq reaching all-time highs last week. Our own local markets having traded above 100,000 points. I think we are still above 100,000 points at the stage.
We're now so far above 100,000. Although let's be clear, when I say so far, I mean things are relative. We're so far above 100,000 that even when we are down, 0.04%, we're still above 100,000.
Okay, so we're doing well. Local markets have all but shrugged off kind of the 30% levels, we knew they were coming, right? So I think the market was also just like, okay, cool. If South Africa's in at 30%, then that is what it is. And that's where we're going to kind of move forward. But the Rand has strengthened on the back of that. Back at, I think it was 1770 last week when I checked. I'll take a look at it quickly.
74 right now.
1770 below 1775 after having touched 1840 when the tariff kind of implementation was coming into effect. So markets pretty much being like, okay, cool, so we're moving on.
Yeah, no, markets totally are. And if we look at S&P earnings, I mean, about 90% have reported. About 81% gave earnings and revenue surprises. In other words, more than was expected. Now, that's just called managing expectations. So let's not get too excited. But earnings growth as we sit right now, and mostly apart from NVIDIA, it's the small stocks to come. NVIDIA, of course, is the elephant. Earnings growth has been like almost 12%, which is actually not bad. It's also the third quarter in a row where you've had double-digit earnings growth. This was a good earnings season. Forward PEs dropped, gone up to 22.1. 5-year average is about 20 and 10-year average about 18.5. So earnings were good. Market is not cheap and just off highs. I mean, the market is, if it wasn't for all of the tariff shenanigans and wars and other sort of things out there, you would say, yeah, market's a little bit expensive, but what's the worry? You know, there's some underpin of earnings. It's just all of that sort of stuff that's now lurking out there, tariffs, et cetera, et cetera. Yeah, how's that going to potentially impact it? So earnings were good. Market is responding and ignoring the orange one.
Somehow, I don't think that's going to be something that he would want to hear. I don't think he would want to hear that the world is ignoring him. But there is only so much that the market can take, right? In the form of notes and announcements and demands from the White House. I mean, you can't expect the market to then listen and price in absolutely everything that you say. And if this is going to be you in the first 100 to 200 days of your presidency, then the market's going to has already hit exhaustion. They're not going to keep going through this. But Bitcoin is back above $120,000.
Risk on trade.
Risk on trade.
I mean, Bitcoin is your ultimate risk on. I mean, basically, it's a geared option on the S&P 500. It just gets accelerated. So yeah, it's a risk on trade. And it's saying like, don't mind me. And the VIX is down at 16, which is sort of like where it goes when it likes to be lazy. This is a market that is almost, it's kind of just ignoring Trump. It's just like, yeah, dude, whatevs. And if you think back to what happened in April and Liberation Day and all the panic around that, just like, yeah, okay, that's fine. We're not going to stress it, which is, let's be clear, is wild. Yeah.
Absolutely
it's totally
crazy.
Wild. Yeah. But this is how we're rolling.
And the dollar index as well going to about 95.90 in terms of lows recently, but seemingly bouncing, hasn't been able to break back above that 110 level, or really above 100 if we're being honest. Yeah, you're right. I mean, since we've dipped below 100, we haven't broken back and closed above 100 on a monthly kind of setup, but it's also the worst in the worst territory we've been in all year. I mean, we started the year closer to 110, and it's just been...
Yeah, it absolutely has. And I mean, to your point, when we say we started the year at 110, that was right about when Trump got sworn in. Yep, that week of 13 Jan. That was when it peaked at 110, and it's been one-way traffic since. It did. I mean, it bounced strongly a couple of weeks ago, back above 100, and then sort of just faded again, and is... Yeah, at this point, you want to be short dollar and long the other side of that equation. Unless maybe you Mexican peso or something. Actually, I take that back. I don't know much about Mexican pesos.
How long do you want to be short dollar? Because I saw something online that suggests that if we start to see rate cuts, the perfect time for rate cuts probably might be around next year from a US perspective, because then it gives the markets a lot more kind of room or a lot more gusto into uncharted territory that we're already in. I mean, we're already at all-time highs. We've been at all-time highs for quite some time across various markets, not just local markets. If we start to see the rate cuts come in from next year and you start to see the optimism push back into equities, how much further does that upside rally go? Because, and I want to look at resources as an example. Resource counters locally are up more than 50% for the year to date.
Resi index, Resi 10 is 75% year to date.
So how much further upside do we go into?
So that's the trick. I mean, and I was looking at the Resi, and the Resi is about 60% gold. It's only 10 stocks, so it's about 60% gold, about 15 or 20% platinum. And I throw Sibanye into the platinum more than the gold side. And then, of course, you've got some Sasol, some BHP, some Anglo. And there's pretty much your Resi 10. I mean, how much higher can it go? So gold counters, I mean, surely, unless gold breaks above the 3,500 and starts another run, which I think it'll do. I just don't know when. I'm not necessarily expecting that anytime soon. And I think that your PGM counters now need to come to the party. Palladium slipped back a bit. But what we're going to start seeing from that index is the dividends come tearing through. As the gold miners start paying juicy dividends. Is it going to do 75% in the next year? Look, I've seen crazier, but that would be proper crazy. But at this point, I think it starts to become a dividend play. The dollar index, I think it can get down to the low 90s.
Really?
Sure.
I can see 90 points, eh?
Yeah.
I can see 90. I can see possible. I don't know if I can see 85 just yet.
Ooh, no.
That's a bit too depressed, but I can see 90 also being a new level of support, coming back to retest that level. But then that implies then that the White House and Mussolini over there do something crazy that the market really doesn't like, because up to now he's done the craziest that he can and the market hasn't gone that low, so it would require a new level of crazy to be unlocked for us to go down that low.
It absolutely would. And to be clear, part of the Trump plan, and I use that word cautiously, is a weaker dollar. It helps exporters. It makes them more competitive. And if you look at sort of the tech stocks, the Mag 6 or however many we left in the Mags, a lot of theirs is export, so it merely matters. It doesn't help your Russell 2000, about 20% is export, so it really is more on the tech side, more on the S&P side. He wants a weaker dollar. How much weaker? Time will tell. And we also have to remember that the DXY is it's a dollar index. It's mostly euro, and it's certainly DMs. There's no ZARs in there. There's no Turkish liras, Mexican pesos, or Brazilian reals, or anything else. But he's not overly stressed by the weaker currency. How do you pay off a large amount of debt? Deflate it away, which is one way to do it, or weaken it in currency.
There we go. So you end up paying less effectively. David has jumped onto our live chat and said, what is the best Monday morning live on YouTube? And why is it Insider Exchange?
Because that's how we roll.
That's how we roll. There we go. Welcome, David. Lovely to have you with us. We don't know, hey? We don't know. I think it's because we have guys like you in our community that always give us a reason to love Mondays a little bit more, because Mondays are not for everybody, right? We've spoken about this. Mondays, oof. But if we have community like we do, we continue to show up and we continue to do the best that we can for the community. So that's why Monday mornings are so great, and that's why this live is probably the best on a Monday morning. Speaking of the live, before we wrap it up, let's get a sense of how the day looks and what markets look like. I mean, I'm looking at the Rand. We said 1773-ish is 1774 is where we are. I think we've got a bit of gusto to come down to 1750. Wouldn't be surprised if we push down to that. I mean, even if we start to move up from here, I don't see us breaching 18 Rand unnecessarily at the moment. All but the worst has been factored in at this point, despite the fact that things like the national dialogue don't seem to be working out for President Ramaphosa locally. I don't think those sorts of events move the Rand at the moment. I think that's a minor political inconvenience.
And we rushed above, 2 weeks ago, we rushed above 18. We got to a high of 1835, just ahead of the tariffs. And what we see is that when that happened, the market just came and traded it. It was insane. Got to 1835 and then turned on a dime and just went back to 18. Now back at 1770 and some change. The Rand rand is looking stronger. I agree with you. 1750, 17 is the number I'm really keeping an eye on.
Yeah, so I'm looking at that liquidity sweep that you're talking about just above the 1840, 1835-ish range. And that for me looks very much like something that if we were to get a couple of things right locally, we could break 1750 with. That is enough momentum for us to, if we start to come and test 1750 again, 17 is not out of the question. It really isn't. Yeah. But for 17 to happen means then that South Africa needs to be doing well. It means then that we need to be having a GDP growth that isn't going to be knocked by...
I mean, yes and no, right? I mean, how much is it rand strength? How much is it dollar weakness? And it's bits, it's bits of both. I mean, it certainly is bits of both. We all read that Nedbank statement from last week, their forward guidance. They've got Standard Bank on Thursday. I want to see how bad their forward guidance looks. ABSA, I think next week, also I think Friday. But it is at this point in time, certainly I think we're moving stronger, and I don't see any reason why that's going to. So it's stronger in the rand, higher on our market. And today we're down, and today it really is all just about resources. If resources weren't counting, we would be up nicely. They're down 2%. Our market's flat. I mean, and that is just resources. Stronger rand because it's now 1772 as we talk. Gold off a bit, and I'm watching Palladium. Palladium's looking a little bit,
Yeah, I think there's a lot within the market. I think there's a lot that's going to... I mean, I'm looking at the top 40 now. All-time highs, basically. We broke above the previous high that we had set at 93,000. I think we're almost at 93,500 at the moment. And if we look at the chart, it's one of those bottom left, top right charts and looks absolutely fantastic, having bounced off 90,000 points. So I do want to believe that there is more upside for all markets, South Africa included. But I think a lot of that, as you said, is a function of some of the other variables, like the market negatively pricing in Orange Mussolini's comments every now and then. But also, I think the performances, like you said, the PGM counters, the gold counters, they're going to start reporting numbers that don't look real because their all-in sustained costs haven't moved.
They've hardly moved. I did an analysis earlier in the year for the results to end of December, and some were half year, whatever it was, but they were averaging a gold price of around 2,200. They're now averaging a gold price of 3,300. That extra $1,000 an ounce just drops straight to bottom line. A little bit gets taken off for bonuses and costs, but most of that $1,000 just like shoom, bottom line, paid out as dividends. If they're not paying it out as dividends, careful, because what are they paying it out as?
And where is it going? Yeah, absolutely. I think those are important factors. But we're going to have to leave our market matters on that note. We're going to keep an eye on some things coming out this week. As Sai mentioned, we've got an update from Africa's largest bank by assets in the form of Standard Bank later this week. So we'll be covering that and taking a look at that when we can next week. And just how they are viewing the market. I think it's important because financial stocks in South Africa's context are almost lead indicators of how the strength of the South African economy might be perceived by global markets as well. So as those financial companies continue to report on what they are seeing, we'll see how that continues to affect markets. And we'll keep an eye out for the other things that are developing this week. I believe we've got some US data coming out this week as well. As we usually do, but I think those data points become somewhat important depending on what we see from the White House. Again, that is going to be the driving factor of a lot of these conversations, but this is where we're going to leave Market Matters. We're going to get into our deep dive. As we said, we're diving into creative ways to reignite the South African economy, taken off the back of things like those evergreen contracts that we've spoken about in the past. So stick around for that, dropping later in the week. But for now, this has been Market Matters.